Welcome to a new video. Today's video will be a trade recap of the trade I took today on GU and the Euro against the USD. Okay, so coming into the charts for today, our bias from last week was pretty bearish as our previous weekly candle closed bearish after we observed a two-stage cracking correlation at the highs. Two-stage SMC on two-stage sequential SMT at the highs of the previous weekly candles. Okay, so considering all of that, last week was pretty bearish and we sold having expansions all throughout last week. So I came in today expecting some sort of retracements considering the heavy liquidity objectives we've hit since last week. So on the pound, the first thing that caught my attention on the weekly chart was the development of price coming into a weekly fair value gap, as well as another level, an open high level over here on the weekly. So in conjunction with those two key levels, I was expecting some sort of different phase of price delivery coming into today. Alright, so majorly I started my analysis on the euro dollar, and for the euro dollar it was quite similar as they move in conjunction. Okay, the euro observed the two-stage sequential SMT as well on the weekly highs, with the previous week not being able to take the previous weekly highs. So with all of that in mind, I also was watching the levels that euro hit, and then we got this same gap on the euro, as well as some sensitive weak rejection areas on the weekly chart. Okay, so I was pretty bearish, but I was observing some key levels as well on the euro. So coming into the weekly open, before engaging with any price through my system, any price action beginning any week, I want to watch price develop around daily key levels, okay, to set the stage for also extra confidence and context on how price action would develop throughout the week. So dropping down to the daily chart on the euro dollar, the next thing I could see was that price had observed an expansion between consolidation, and we had some liquidity dispersing at the highs, and then we had expansions to the downside, clearing all of these lows, okay, these weak lows that couldn't see price push to the upside to go right for them failure swings on the left. Okay, so it was pretty bearish, but also price also hit two levels of interest for me on the euro dollar, considering that my drawn liquidity overall for this week and watching how price may progress long term. I'm still bearish up until this low over here. Okay, I want to see price distribute down to that point, okay, as this could be viewed as an original consolidation. Okay, so I want to see a market maker model distribute down there, but without wasting much time, my levels for bearish continuation had not been hit, and we've had over 4 days of expansion. So I did not go into today with bearish context. I did make up my mind to stay away, but the first rule of my system was activated, so I had to engage with the charts. Okay, so the first thing that I noticed was the engagement with this daily key level over here, this open high over here on the daily key level. All right, we had an open high followed by high close, okay, with an open high, a high close and an open high key level. All right, you can see how sensitive it was when price touched that zone. Okay, so with our inversion theory in play, all right, seeing how sensitive it was, as we could create the sensitivity with this weak reaction. All right, we had a close through, and I did expect this level to provide some sort of bullish retracements or a reversal, as the case may be. All right, another thing to know is that we opened the daily candle by taking the previous day's low. Okay, that in itself is a key level, and I want to watch its reaction on time frame alignments. I want to watch how the 4 hour develops in reaction to these two levels. Okay, the previous daily high, previous daily low, sorry, and this open, this high close open high level. All right, or you could call that your A level. So the first 2 hours of the Asian session, I usually let print as my model rarely engages during that time of the day. So we had the Asian session print after the daily opened with an open high, low, close, a bearish candle. Okay, continuing the last manipulation move from the last week. All right. In conjunction to that, we had the next candle of the Asian session 21, which is 9 in New York time. All right. We had 9 in the morning, 9 in the evening, sorry, open up and engulf the previous bearish candle. Okay, so that was one of our first signs of reversal, as I'll be dropping a video concerning the different type of reversals we want to be, reversal signatures we want to okay, so we engulfed the previous bearish candle, close over it, and that for me, my system is a quality signature or uh, reversal or some liquidity movement switch. Okay, like either external back to internal to external. Okay, so another thing we observed between those two candles was the sequential SMT between the quarters. Okay, so we had 21 diverging with 17 on GU, and EU did not take the low. All right, that was the divergence, adding extra source to our um bullish context, bullish narrative we were creating. Okay, so the 1 a.m. candle printed on GU and on EU. We also let it print. Okay, so what I wanted to see according to my model was a 1 hour change in the date of delivery to confirm that the daily candle had indeed reversed. Okay, so I wanted to see a 1 hour change in the state of delivery before engaging. Okay, there are several other rules and context I would have loved to see. Alright, even though a variant of the model could allow us to engage at this price point, as this is another unique price level for confirming reversals. Okay, another price pattern for confirming reversals. Alright, I didn't use that. Okay, I don't know the model. Let's see if it did print at points. Yes, it did. As at 1 a.m. we printed into this proportion block. We created a precision swing point on EU. It was a bearish candle, and we had the continuation sequence printing the bearish candle, and we had SMT confirming the VSP. Okay, into a propulsion block. Alright, on GU we did not have, alright, we had, okay, um the SMC, the PSP, it was a bullish candle on GU, and the next candle printed sewing straight, okay, printed without taking the 12 o'clock 1 hour candle. Okay, so we could have engaged at this price point, but I came in late into London section, so all of this had happened, so I didn't engage at the price point. Instead, I engaged after a continuation sequence had printed. Okay, so a 1 hour fair value gap formed. All right, and then we had a retracement into that key level. Okay, and I was watching that key level development on the 15-minute chart as that is my entry chart. Okay, so the next thing I saw on the 15 minutes was a print of a short-term low, and the price ran the short-term low with a close above the series of consecutive down close candles, and therein was my entry on EU. So I took this entry, and as you can see, it ended in a loss. All right, in terms of target, I used my standard deviations to project the 1 hour candle, the 1 hour CISD for targets. Okay, and I was targeting the 2.5 level. All right, I was targeting just slightly above that 2 hour. All right, or 2 hour, somewhere in between here. Wasn't really going for the highs. All right, and that was my entry on EU, and as you can see, it ended in a loss. Okay, which is fine. Another thing I want to point your eyes to, your attention towards is of the continuation sequence. We had the PSP candle at 3:30. We had one at 3 and at 3:30, and ultimately we ran out those two candles into the 1 hour key level. So confirming that on the GU, we had the precision swing point as well, a PSP candle printing at 3:30, being unable to take 3 o'clock candle. Alright, so we had a divergence around here, right? As you can see, GU was taking it, was not taking it, and EU was taking it. Okay, and also we had price prints, another up close candle into the key level, which was PSP being confirmed by SMC, another cracking correlation. This was a very valid entry. We got stopped out, which is fine, as price can do at importance. However, on GU, we did take the entry as we aligned the 30-minute continuation sequence with our 15 minutes price action. Okay, so I placed a limit order somewhere around here. All right, took longs. After this close, I set my limit here, and I set my stop loss just below the invalidation point. Okay, as you can see, price came up, and then I was targeting these highs. Okay, yeah, so price came up, tagged me into my entry as at the development of the 5 a.m. candle. So you can see on the 4-hour chart over here, the 5 a.m. candle opened. Alright, went deeper, made the retracements. Part of the things that contributed to the 5 a.m. Expansion was a tap of this 4-hour key level. Okay, and then we had explosions to the upside. All right, more expansions. We could have traded the 5 a.m. candle, and as you can see, there was still more expansions. So I'm going to show you how you could have traded that. So at the open of 9 a.m., we could get this. Let me turn this off and open this. All right. So we see 9 a.m. open just around here. Cool. All right. So sorry. Let me lock that. All right. So we see the 9 a.m. candle opening at this price point, and the first thing we want to do is align where expansions for our expansions should take place, and they should take place in, let me take this out, in 30-minute or 1 hour key levels. Okay, so with that formula in mind, we had price day into this level at the open of 9 a.m. Okay, now at this point, let's just mark that out so that we'll know where 9 a.m. was. Alright, we had 9 a.m. at this point. Turn off my price indicator. See a, alright, very good. So with the 30-minute time frame, we had 9 a.m. opening into this key level. We ran the previous lows of the previous 30 minutes candle, and we printed PS like what G. Okay, so drop into EU, good with